Ever heard of volume profile? It is a little-known trading indicator, but easily one of my favorites. Now, over the course of my 20-year career, I have worked at 4 different day trading companies. I've also been a stockbroker at 2 different firms. And during that entire 2-decade period, I can count the number of short-term day traders who were consistently profitable on one hand. And every single one of them used this. Now, volume profile is not the end-all, be-all. I used to swear by it. I used it a lot for targets. Obviously, there's more going on, but this is a really nice tool to have in your toolbox, and there's really 2 ways to use it. Now, what you're looking at here is a daily chart of Nvidia, and I've put what's known as a visible range volume profile on the chart. That's this over here in white, and if you're using TradingView, you'll just go to Indicators, click over here on Technicals, and it's found under Profiles here, Visible Range Volume Profile. And it's just like it sounds. It puts up a profile for the total visible range on the chart. So if you notice, when I scroll in, watch that profile, it's going to change. Now, the way I prefer to set it up is from swing low to present, but let me just tell you what you're looking at. This profile is sort of it's like a typical volume histogram, but turned on its side. And instead of a traditional volume indicator like you see on the bottom that shows you how many shares traded each day or at each time, the volume profile shows you how many shares traded at each price. And this can be very significant. Now, any stock is in one of 2 phases, okay? It's generally going to be either in price acceptance mode or price discovery mode. Price acceptance is going to be a period that looks kind of like this. The market has agreed it's worth, $70, $80, $85, $90 a share. And again, the stock market is just an auction. It is buyers and sellers trying to agree on price. And when the buyers think they get a pretty fair price and the sellers think it's about what it's worth, it's generally going to hop around that area. When new news comes out, whether it's general market news, the company's got big earnings, new CEOs come in, or bad news, a stock can enter price discovery mode. And that is when the stock is going up or down in search of a fair value. And if the buyers think it is worth more, consistently buy, it's going to go up. If the sellers think it's worth way, way less, they're going to sell. And whoever wins that battle is going to determine the direction of the stock. And so what volume profile does is try to identify those levels of price acceptance, the areas where buyers and sellers both come to do business. Buyers think it's a good buy there, sellers think it's a good sell there. It's somewhat of an acceptance area, and those tend to be magnets for a stock. So if you look here, this period of Nvidia, and again, you can go way back. I like to set it up at like the swing low of a big move higher, or if you're in a downtrend from the tippy top when it started to go lower, and create kind of a big profile. And so there's 3 things, I guess, 3 components of this. The first is what's known as the value area. And that's, you see this kind of brighter white in the middle and it's darker gray. You can make these colors whatever you want. But the value area is the middle 70%. Okay, that's sort of like the middle of a bell curve. And then the 2 things you're really looking for are what are called high volume nodes, i.e. areas where the profile comes way out to the right. There's a lot of volume traded there. And then low volume nodes where there's very little trading there, and it just kind of blew through that area. And again, not perfect, not every time, but generally, stocks are going to reach toward those high volume areas as magnets and either reject or blow through those low volume areas. Now, you want to be careful not to let this profile justify something that happened in the past. So in other words, this profile showing here, it's like, oh man, it identified this $88 area right there where it pulled to in April. Well, this is including that data. So if you're going back, you want to create a profile that doesn't include this action here. So let's just think theoretically, okay? Let's say you were looking at the stock back in here, June 2024, and it starts to pull back. And you're wanting to know where's a good place it could probably pull back to and buy. Well, what this profile on the right would have shown at the time, because again, none of this would have taken place, to see that you're going to come in here and pick the fixed range volume profile. Same thing we're looking at on the chart, but it's only going to be over a fixed range of my choosing. So I'm just going to draw it from here to here. And again, this is going to show me what I would have been seeing on this day, Thursday, June 20th, 2024. And if you notice, that was the target right in here. I'm going to turn that point of control off. But look how here, and again, from that rally, this is what you would have had, and you'd have seen, okay, the big volume area where there's a lot of acceptance was right here in this kind of $85 to $90 range. That's where it's likely going, it's going to roll over. That's where I want to place my buy order. And if you did that, man, you would have got in a really good price. And you'd have picked up stock here, and it would have ripped 40% over the next 18 days. The other thing, again, are these low volume areas that are often rejected. And really the way to use these would simply be cognizant of areas that might get rejected. If you got a big target coming in here, but there's a big low volume area in here where there is no trading, I might take profits a little bit sooner. I might get out at 99 or 100 instead of waiting for the push down to 90. But high volume areas and high volume nodes and low volume nodes are really what you want to look for. And then I turned it off a second ago, but inside this indicator is something known as the point of control, the POC. That's simply the place where the most action is taking place. And it's not a big deal on this big multi-week, multi-month chart. But if you go down to the dailies, it's going to be significant. And let me show you what I mean. So I'm going to turn off this visible range volume profile. And again, like I said, most people I know that have used this successfully are very, very active day traders, trading something like the S&P futures, crude futures, something like that. And so let's just go down to like a 5-minute chart. And what they're going to look at, or the kind of volume profile you're going to put on there, is you go back to the indicators, again, technicals, again, profiles. But see this right here where it says session volume profile? That's going to create for you one of those profiles for each individual trading session. So each day. And now this is the futures market. So it's got, let's just put the regular trading hours on here. We'll turn that extended hours off. And you'll see here how it's drawing you a profile for each individual day. Let me make these bars a different color just because it's a little bit distracting, I think. Yellow. Yellow's good. We'll make them yellow. Okay. So the profile is this green and white. And again, I've adjusted the colors to look like this. You can make them whatever you want. The point of control, as you can see, that's the highest. The price where the most volume traded that session is in red. You can chart the value area low and high. Again, that's like the middle 70% of that bell curve. You can turn on a developing point of control. So like if you notice over here to the right, see as you're trading throughout the day, this thing kind of moves around, shows what is developing and becoming the point of control. So that might be something you'd want to watch. There's a few other options in here. This is how I've got mine set up. But the idea is it's showing you where the distribution was throughout the day. And again, a commodity, an index of stock is going to tend to, if it is in price acceptance mode, kind of rotate back to the last area it saw acceptance. So it is huge up day in August 22nd. It formed this value area up here in the kind of 64.80 to 64.90 area with the point of control. The next day it gapped down. Let's just zoom in a little bit. Now the next day it gapped down. Here, and notice where it went up to. It pulled right here, just about to the penny of the previous day's point of control. I'll make that a little bit thicker. Because that was the last area of acceptance. That's the last place there were buyers and sellers. So it comes back, hits that point of control, and then resumes its sell-off. So if you were looking for a tick up to get in, that would be an obvious place up here at kind of 64.83, 84. You'd want to get into this thing on the short side. And then it begins building these value areas lower and lower. Again, next day, comes in and gaps down, comes back to the value area, and then rips all the way up into the point of control of the previous day. And so I'm not doing this justice, but the whole idea is to see where the action is, where the acceptance and rejection is, and notice that if you get a move lower, if you get a price discovery move either higher or lower, it is likely going to target that most recent accepted area. So you had this big gap down here. You know it's going to come down to this previous point of control. My target would have been right down here. Once it kind of, it gaps down, it breaks the low of that previous day. All right, well, it's probably going to hit this big volume area right in here. And that's pretty much exactly where the buyer stepped in. So you want to think of it in terms of if the market is selling off, where's the last place the buyers did business? Where's the last place the buyers came in and were happy to buy? If the market has fallen and now it's rising really quickly, where are the sellers likely to step in? Where's the last place they thought it got overvalued, stepped in and began selling? Because that could be a very good target for you since it has a high probability of stalling out there when it gets to that point of high sellers. Okay, so this is volume profile, very, very elementary overview of it. Again, I think the biggest value of it are one, for you guys who are short-term day trading, either stocks, or futures or commodities, something like that. We can put the same thing on Palantir and see a very similar action here. So notice you had this big ripping up day where it came in and built value up in here. Next day it runs higher, starts to roll over. And then if you're short that day on a break lower, you were targeting this previous point of control right there where the thing kind of found acceptance the previous day. And again, it just comes back and finds more acceptance in here. It's not really doing a whole lot. But if we go back a little bit, I can't go back too far. There are other software platforms that are more designed for volume profile, like NinjaTrader has some add-ons that are really good for it. There's others. The tough thing about volume profile, at least to do it properly, it runs on tick data, meaning it's got to have really accurate time and sales data, how many shares traded each individual tick. And a service like TradingView is typically not going to store weeks and months of tick data. It'd be gigabytes, terabytes of data. So it looks like here, at least on these stocks, it's going to hold 6, 7, 8, about 2 weeks worth in here. The bigger profiles, like I showed you earlier, where we're looking at multiple months, potentially multiple years on a visible range volume profile. It doesn't need to necessarily be tick data. It doesn't need to be quite as precise. You're just looking for where those shares traded at each individual price. And so, take Palantir here. If this thing really started to roll over, what would my targets be? Well, I'd be looking for it to hit around 123. If it broke through there, good chance it's going to fall all the way down here to 75 or 80. So it identifies some high probability areas both on the upside and down. The only time it's not really going to do you any help is when a stock or a commodity or an index is at all-time highs. Because if you're in price discovery mode on the way up and you're up here at 200, Palantir's never been at 200. There is no data up there. You're just in price discovery mode. So it's really not going to do you a whole heck of a lot of good until it breaks down, starts rolling lower, and you can identify either these prices of acceptance, which is likely to target, or these very low volume nodes where the stock could bounce and reject. So that is a very quick and dirty overview of volume profile. I encourage you to dig into this. There's a lot of resources online, but it is a really nice tool to have in your trading toolkit, again, primarily for identifying great places to buy off the lows where buyers are likely to step in, or take profits near the top where sellers have previously shown they like to take action. Now, if you haven't already, hit the subscribe button down there in the bottom corner. That way you'll see these videos as they come out. They'll show up in your YouTube feed, and I look forward to seeing you in the next video.